Welcome to Money Answers TV. I'm your host, Jordan Goodman of MoneyAnswers.com. Today we're going to find out more about the best way to refinance your mortgage. My guest is Joseph Kelly, president of You Can Refi. Joe, welcome to Money Answers TV.
Thanks for having me, Jordan.
Americans owe trillions of dollars on their mortgages these days. What is the biggest mistake they make when they're refinancing their mortgage?
Jordan, I think a couple of the biggest problems that we see are that people don't take a little bit of extra time to research who they want to work with and try to find an ethical, trustworthy, and experienced mortgage professional who's going to take the time to work with them on specifically, do they have benefits to refinance? Not just in the near term, but then working with them long term to use strategies. Secondly, we see so many people in today's world giving their information online, thinking that they're trying to get a lender to give them a call, and they will get a lender to give them a call because those companies then take that information and sell it to multiple companies. Read the fine print. Look at the bottom of that web page and see if the company that you're giving your information to is actually a lead generator and is going to share or sell your information. We never do that. We don't sell anybody's information.
So people can really be barraged with lots of, and then they get very confused.
Oh, Jordan, it's incredible. They get barraged. We talk to so many people, they get so confused because they have multiple lenders calling them multiple times a day and sending them emails for weeks on end. It's very hard to then distinguish who to choose.
So who is You Can Refi, and how are you different from other mortgage companies that people might be looking at?
So Jordan, You Can Refi was actually created to help consumers get experience and professional advice when they're considering refinancing. Whenever rates take a dip or go in a downward cycle, mortgage companies ramp up their call centers and they ramp up their marketing, and you see ads every time you turn on the TV or turn on the radio. And it gets very confusing for people. We wanted to have experienced mortgage professionals with decades of experience be able to offer that consultative, concierge-level service to homeowners when they're making those decisions.
So many people may hear about these services that will submit their loan information to many lenders who then compete for their business. What's so bad about using a service like that?
So in theory, it's not bad at all when you hear the line, have lenders compete. And it is true, lenders do compete, but not typically in the way that homeowners are thinking. Lenders are competing by trying to outbid other lenders to buy that lead from those companies in order to put their marketing teams to work on it. So what ends up happening is you have multiple lenders calling these people on an endless basis, usually employing RoboDialers and call centers, not mortgage professionals who are trained to answer questions and evaluate the options for a consumer.
And somehow the cost of all that must be going into the loan as well.
Exactly, Jordan. Somebody's got to pay for that. And there's a tremendous amount of money that is both charged to the lenders and made by these companies. Read the fine print. Look at the bottom of a web page and see when it says that they are a lead generation company or that they're sharing or selling the information with multiple mortgage companies.
When does it usually make sense to refinance your mortgage?
Jordan, there's many factors that go into when somebody might choose to refinance. All things being equal, if someone can lower their rate even 0.25% for little to no cost, it makes sense. But there's other factors such as being able to consolidate debt or be able to get out of mortgage insurance like an FHA or a conventional loan that has mortgage insurance when their equity has improved on their property. We recommend that people take 5 to 10 minutes and talk to us. There's no obligation. Let us evaluate whether there are significant benefits to move forward on considering a refinance.
What financial criteria are you looking for from borrowers to approve them for a loan? Do they have a minimum credit score, for example?
So Jordan, You Can Refi works with a national lender. We've actually been with them over 10 years. They're an amazing company. And we don't look for anything different for the programs that we do. We work with all traditional mortgages, conventional, FHA, VA, USDA, all those types of different programs. And there are some minimum credit scores and minimum guidelines that vary depending on the program and depending on the borrower.
How long does a typical refinance take?
So to complete the process, it really depends on finding a right lender that has a good back office. We do. From start to finish, from the time that they make an application to the time that we're ready to close that loan, our average as an entire company was 23 days last year, and we're on the same pace this year to maintain that turn time.
And how does that compare with other lenders?
Well, I can't speak for other lenders, but I do know from talking to many borrowers that it is among the fastest in the industry. There's regulations in place that you really can't do it too much faster than that because of the disclosure process.
Interest rates are so volatile day to day. When should people start the process of refinancing so when the best rate's available, they can lock it in?
Well, Jordan, I can tell you that if you wait to hear that interest rates have dipped, if you're watching the news or reading the paper, you've probably waited too long. Anytime that you are thinking about refinancing, you should consider taking 5 to 10 minutes and have a conversation with us or another reputable lender to evaluate your options. Almost every lender in the country will not lock in an interest rate unless you've made an application, either in person or online. That's how they secure that rate for that person. We live with interest rates. You don't, most people don't. So we're watching the news and we're reading the forecasts and living with that on a daily basis to be in the best position to advise somebody when they can lock in.
So what fees and closing costs should people expect to pay when refinancing through You Can Refi?
So You Can Refi itself doesn't have any additional fees or closing costs. We have the same closing costs that anybody would have when they're looking to do a conventional FHA or VA type of loan. What we do have is that we work with national lenders and national title companies to have the lowest closing costs in the industry, to be able to help serve them both in the near term and long term by lowering their interest rates for little to no closing costs.
So what are homeowners' options in paying for those closing costs? Can they pay them out of pocket or they roll them in? What are some of the options and how do you help people figure out what's best for them?
You know, Jordan, unfortunately, every loan has closing costs. And when you're refinancing, you only have a couple different options. Either the borrower can pay them out of their pocket, they can wrap them into their loan, or the third option, and not everybody talks about this, is that having the lender give a lender credit to pay for those closing costs. We're going to take the time to take a look at each individual's options and what is best, where we are in an interest rate cycle, whether it's better for them to wrap it in, whether it's better for them to let us pay the closing costs with a lender credit and then monitor their rate over time to be able to lower them further when interest rates take a further dip.
So how do your closing costs compare to what they may be seeing from other lenders?
So Jordan, fortunately, since the mortgage collapse, there have been a lot of laws and regulations put in place to help protect consumers from the unreputable lenders that used to be out there charging tons of closing costs. We do still see on an occasional basis significantly higher from some lenders, and everybody should take the time to compare rate and costs when they're looking at refinancing. With us in particular, we work with an amazing lender. We actually have only one lender fee, and that's $1,195 that covers processing, closing, underwriting, all the different parts. We don't charge a 1% loan origination like many companies do. So we are among the lowest in the industry from a closing cost standpoint.
What is the maximum percentage of the value of a home that you'll lend against?
So Jordan, part of that depends on the type of program that they're looking for. So on a refinance, if someone's eligible for VA, for a military loan, they can go up to 100% of the value of the home, whether it's just to pay off another loan or even to take cash out.
So how do you work with borrowers after the loan is done and you're checking back in with them? How does that process work?
So Jordan, with You Can Refi, we're not looking just for a one-time sale. Like many companies, you'll get the feeling all they care about is just getting you into the system. We're looking near-term and long-term. We educate people on what's the best decision for them, both on closing costs and on mortgage strategies that over time, we're going to look for additional ways to increase their savings and reduce their debt.
So if someone wants to find out more about You Can Refi, how can they contact you?
So Jordan, they can visit us on the web at youcanrefi.com, or they can call us at 1-800-272-5626.
It was very interesting. Thank you very much, Joe.
Thank you, Jordan.
So when you're ready to consider the potential benefits of refinancing your mortgage and want an experienced, honest, some personal service and competitive programs, visit youcanrefi.com. For Money Answers TV, I'm Jordan Goodman.